Hello, and welcome to another episode of the Market Pulse series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So thank you. Thank you for your patience, and let's get things started. So I'll be starting with one of the most important things, and this is a highlight of the fact that this does not represent investment advice, neither is it a recommendation to trade. So you should always do your own analysis and practice proper risk management. So today we will be looking at the key events of the day, try to understand what happened. Once we go through that, then we will be able to understand where the markets may be headed next. So we'll also be looking at technical analysis to understand the key market levels, what transpired during the day, and how to handle that going into the last day of the week. So let's start with the economic calendar. So from the economic calendar, we've had quite a number of events ranging from one, the jobs report from Australia, where there was a surprisingly big drop in the number of new jobs created within the Australian economy. So there was a big drop of negative 65.1K compared to the previous month of November, where there was a 72.6K jobs created. It shows how bad the economy is doing, especially with this large number of jobs being lost in the Australian economy. So later on, we had the current account from the Eurozone, which came in at 34.6 billion euros. And this was a miss compared to the previous reading of 32.3 billion and the expectation of 30.9. So later on in the afternoon, we had the unemployment rate claims coming from the US, and we had a surprisingly low number. So the number of new unemployment claims was 187K, which was lower than the projected numbers and lower than the previous reading of 203K. So this continuously shows how strong and resilient the US job market is. So if you have less and less people claiming for unemployment insurance, means that the job market is resilient and people are basically holding on to their jobs. So building permits surprisingly improved to 1.5 million, up from 1.7 million in the previous reading. Philadelphia Fed Manufacturing Index continued showing negative numbers, in this case at negative 10.6, showing that manufacturing conditions are worsening. And if you remember very well, we also saw the New York Empire State Manufacturing Index, which also came in strongly negative at negative 43.7, down from negative 14.5. So both indicators are showing worsening manufacturing conditions within the US. So we also saw housing starts jumping higher than expected at 1.46 million against 1.43 million. And then this was a slight drop from the previous reading of 1.53 million. So clearly, construction is taking an uptick. And also, this is an indication that is not consistent with what the Fed is expecting. So clearly, this is mixed data. Two data points, building permits and housing starts, are inconsistent with what the Fed is looking to achieve. Remember, they wanted to cool down the real estate sector. But then for Philadelphia Fed manufacturing and unemployment claims, we are seeing Philadelphia Fed manufacturing index being consistent with the Fed's expectations. But then unemployment claims were inconsistent with the Fed's expectations. So the Fed has been looking to see much higher unemployment. But then with this and the economy retaining even more jobs, then it basically shows that we have three data points that are supportive of the Fed holding rates higher for longer, and one data point that is supportive of the Fed cutting interest rates early in this quarter. So as a result, the overall expectation is to see the Fed basically holding rates higher for longer, which tends to be positive for the dollar. So on the energy markets, we saw the natural gas storage coming in at 154 billion. And this is worse than the previous reading, which was negative 140, meaning that the reserves are getting worse. They are basically dropping for natural gas. Later on, we saw the crude oil inventories, So for crude inventories, they're also getting worse at negative 2.5 million, down from 1.3. So when you see the supply of a commodity getting lower and lower, then it means the commodity is getting scarce, and that tends to be bullish for prices. So looking forward, tomorrow we'll be having UK retail sales at 10 a.m. and also the German producer price index still at the same time. So the retail sales tends to be the bigger data point here for the UK. So that will be the focus tomorrow morning. And the overall expectation is that the retail sales worsened by negative 0.5% in December compared to the previous reading of 1.3% increase in November last year. So in this case, there is an overall expectation that the UK consumer is weakening, and we'll be looking to react to this ahead of the market snapshot series that starts at 11. So after 11, I think the rest will be sufficiently covered by Samson Zera, who will be holding tomorrow's market snapshot. So that being said, now we can look at a couple of charts. So the first chart I want us to think about is the dollar index. So the dollar index, as we had projected, and this is something we discussed earlier in the morning during the market snapshot series, is that there was a pullback, which was much welcome for traders, because nothing had changed fundamentally, and we expected the market to push back upwards and retest yesterday's high. So we are currently seeing that happening in the markets. And as a result, you can see major trends resuming the momentum that we had seen over the week. So, for instance, USD JPY was majorly bullish for the better part of the week. So pulled back yesterday in the evening and today in the morning, but now we are seeing the market pushing higher and almost retesting yesterday's high. So the overall expectation is that the market completes the journey and gets to the previous high and perhaps even pushes higher. But the opportunity was to buy the dip and enjoy as the market retested the previous high. So for the Euro USD, there was a pullback, got to this area, which was the previous support, now turned into resistance. And now, as discussed, the market has dropped and gotten to the previous low. So yes, sometimes you will have targets at a specific price level. Market growth gets really close to that, and maybe sometimes not yet hit that, and that's still okay. For me, in my books, it's a winning trade. So for pound USD, we were seeing something similar. So the the pound gaining against the dollar yesterday. Then today we were expecting this reversal to happen. So it went halfway, but did not manage to complete the journey and then pulled back out upwards. And this is showcasing a difference in the behavior of the pound compared to other currencies. So in this case, we are seeing a surprisingly strong pound, and that's something to consider as we approach Friday trading. Of course, remember the market has stayed within this range, and a range by definition is a momentum of price. So in this case, the range can be identified as having an extreme of 1.28271 and a bottom of 1.26082. So in this case, we are seeing the market bounce quite strongly from that bottom. And now we are on the way towards the upper side. So perhaps we should be expecting the market to continue pushing this upswing for the better part of tomorrow. So perhaps seeing some further upside happening tomorrow for pound USD. So for USD CAD, the expectation was that the market would now retest the previous high. So it rallied quite well, but didn't get the previous high, but still that's okay in the market and in my books. So for gold, we saw the market pushing back, testing this previous bottom, now turned into resistance. And somehow it has been unable to break above that. So the expectation is still there that there is that possibility the market eventually bounces back to the previous bottom. However, for now, it seems likely that from a technical analysis perspective, that this trend line has been broken on the 15-minute chart. So it's more like a break, retest, and continue. So perhaps we could be seeing gold breaking the 2018 dollar level and moving higher. So this is also in the books. So it majorly depends on how price reacts around this price level. So I'll be very observant on what gold does around this area. But for now, the prevailing expectation is that the trend continues and gold continues losing to the strong dollar. So for AUD/USD, you can see the strong bounce and attempt to move back downwards. And as we mentioned, the Australian currency being positively correlated with gold. So if you see a major move happening in gold, the Australian dollar tends to follow the same. So in this case, the pullback did not last for longer. And in this case, there's an expectation that we should be seeing AUD/USD following gold. So if gold pulls back downwards, in this case towards the previous support, then I expect the Australian dollar to be following that direction. So US equity indices, we had mentioned that this is a potential trade area. So in this case, we are expecting to observe the market behavior around this trend line. So once the market got here, there was a clean break, and then the market continued higher in what looks like a continuation of the bullish momentum. And now we are basically retesting the previous high, and this was an all-time high towards the end of the year. So now, having retested the all-time high yet again for the Nasdaq, it seems like the market is strongly rejecting higher prices. Now there's that potential that we could be seeing a reversal from this point going onwards. So the strong bearish candlestick currently being formed. If the market happens to close below this level, then there's a good chance that the market will continue pushing down lower, and it will be an indication of the bearish entry in the market. However, if the current candlestick closes near to the open, then that would be a highlight that buyers are stronger in this market, and the expectation is that we break higher and form a new all-time high for the Nasdaq. So a similar case can be identified for the US30, but then the key highlight or the key difference is that for the Nasdaq, it's basically an all-time high, and you can see the strength being presented in these markets. So if you compare this with the Dow Jones, clearly you can see don't have all these optimism flying around. So after an attempt to move higher, what we are seeing is the market pushing back downwards, indicating that after breaking this range, which was a sideways momentum, now we are ready or on course for further bearish momentum. And there's a good chance we'll be seeing the market dropping below this big momentum that happened here. So a good chance that the Dow could drop to $36,604 per share. So a similar case with SP 500. So a very strong rally for the better part of the day, but now we are seeing bears entering this market. And now we could be seeing the market pulling back downwards. Of course, yesterday's low becomes the new target. So a good likelihood that if the candlestick closes here, it means that sellers are entering this market strongly, and a good chance of finding the markets moving further back downwards. So UK oil making a very strong bullish momentum, or simply Brent oil. So from the data we have seen, that is the US crude oil inventories, it basically shows that the supply is getting scarce. So with inventories getting smaller and smaller, then the pressure on prices then positive, and that's why we are seeing the big momentum. Of course, the target now is 79.133, which has been acting as our major resistance. So after getting the data today, we complete the upswing, then we move to this area as our key decision point. So key decision points means that once the market gets here, we observe the candlesticks, or literally the price action, see whether there will be a break or a reversal, and if it's a reversal, then we enter yet another downswing. The market maintains this range. But then if there's a clean break and the market keeps moving higher, then we use this upper trend line as our new target. So in this case, we go for $80 per barrel. So this is a trend line that has been holding for quite a period. So potentially the market could hit this area and now start moving back downwards. So we have to be conversant of the trend lines on the bigger timelines too. So the French 40 index showing a very strong momentum for the better part of the day. So I expect this to continue until we test this particular trend line. So if it's a retest of this trend line, then we observe this area. see whether the market will continue with the bullish momentum or whether it has exhausted this and now preparing to move further back downwards. So key decision point is very close. So we observe this potential price action level. So for the Euro 50 cash index, also we have had a pretty bullish day, and now we are seeing the market basically changing directions. So if I was to remove the area analysis and out on my chart, you can notice that there has been a pre-existing trend lines following different paths. We already have that extreme, and then a sequence of quite a number of swings that have had a very similar price action resistance. So every time the market go to this trend line, you can see the rejection and immediate change in price. So for now, it seems like the market is having a breather, but then we have not yet hit the major resistance level. So we should be observing two price action levels or two price action points. One on the upper trend line here. So what happens if the price eventually gets to this area here? And now the price is moving further back downwards, then a retest of this area would mean that we can have a decision point. So a decision point is an attempt to looking forward and identifying a key change in direction in price. So in this case, for instance, if price was going up towards this trend line, this would be a decision point where you decide whether the market is breaking above this trend line or moving further back downwards. So in that case, if you go for a trade and you are wrong, you're able to exit the small loss quickly. And then if you're right, then you're able to ride a good swing with a minimal risk taken in that particular trade. So in this case, for instance, after this rally, this is no decision point. So to optimize the risk reward, you want to trade at the extreme edges, and that tends to fall squarely on major support and resistance levels. So for Bitcoin, we are seeing a big jump downwards. So another retest yet for the $41,716 per Bitcoin. So in this case, now we are at a key decision point for Bitcoin, trying to understand whether it will break this area or bounce from this area. So break below this area would mean we are going downwards, and that would present short selling opportunities. But then a bounce from this area would mean we are moving higher. That would present buying opportunities. So moving on to New Zealand USD, we are seeing the market playing as expected. So early in the morning, we had discussed a potential continuation of the weekly trend after the pullback last evening. And this morning, we have seen the New Zealand dollar continue losing to the dollar. And now we are on course to retest the previous low, which would be our target for the day. So for US oil, a continuation as we had projected. So after the retest of that area, now we are seeing momentum upwards. So the market broke above the decision point and went straight ahead to our target, which was $74.1 per barrel. So for US dollar against the Swiss franc, here you can see the pullback yesterday and then a continuation. So according to the analysis we had done during the market snapshot early in the morning, we are seeing the market continue quite well and impressively. And now that the market is breaking above that top, then we now start thinking of the next possible top. So from the forward chart, there seems to be even more room for upside. And we could be seeing this rally extending next week to a previous high that we had seen sometime back in December last year. And this is around 0.88131 as the Swiss franc continues weakening to the strength of the dollar. So that's it. That's the key highlight of the charts. And of course, if you look at trading economics, the key highlight for the day has been US jobless claims plunged to 16-month low. So the number of Americans filing for unemployment benefits fell by 16K to 187K in the week, ending January 13th, well below market expectations of 207K, underscoring the tightness of the US labor market. So when you say that the labor market is tight, it basically means that there is a very small discrepancy between labor market supply and labor market demand. So as a result, an increase in labor demand leads higher wages as well as higher jobs being created. And in this case, it seems to be the case for the US economy. So we are seeing a very strong consumer, a very strong jobs market. So only weakness that or crack we are seeing in the US economy seems to be the commercial real estate sector, as well as the manufacturing conditions for both Philadelphia as well as New York so far. So hello, James Wood. Is the pound USD in a range? And we are caught. I think I already discussed that. So for pound USD, it's currently in a range. We already discussed this. This is the range. The market is generally moving sideways. So for like 8 straight weeks or 7 straight weeks, this is what we are seeing as the overall price direction. So in this case, you want to participate only at the extreme edges, not in between. So you want to participate when price is at this range here. From this high to this high seems to be a nice area to be looking for short selling positions as long as the market remains within range. And for the lower side, it's pretty much direct. It's a stable price level at 1.26082. So in this case, potential short selling, potential buying, unless the market breaks out of that range. So, hello, Charles. Hello, Mama Manapasto. I can see Ellen Mitch. My view on gold remains the same. The dollar is pretty strong, and there's a good chance we should be seeing further downwards prices. But then, if you are a technical analysis nerd, we already know that this was a pretty strong trend line. The market broke the trend line, pulled back, retested, and is now moving up higher. So in this case, there's still some form of conference level here, meaning that there is a good chance that this might be working as a resistance level charts. So to be precise, that's the price level. Previous bottom now turned into a high the first time, a high the second time, and the market is still struggling to test this area. So it becomes a key decision point, 2017.53. So a break above means we go higher, and above means we go back downwards. So the idea is to observe this price level, and from a technical analysis point of view, we should be expecting the price to continue in the original direction of the break. In this case, a momentum upwards towards the price level of around, this is projected wrong. To be accurate, is around here, the previous high. So $2,033 per ounce of gold. So for how long do you stay observing the key decision area? So you basically observe the top of the hour price action. That's what I normally do. So if I'm observing the price action, I won't be staring at the charts all day. So I will be checking top of the hour. For instance, if I'm doing it now, I'll wait until 59. See how that candlestick has closed. So if that is not convincing enough, I wait for the next hour. So sometimes it might be a process that may take 3, 4, 5, or even 6 hours. But then if there's a clean break or a clean bounce, that could happen within 1 hour and you have a straightforward decision. So in that case, you go for your trade directly. Last question. I don't think I should be discussing this. So thank you very much, guys, and thank you for your time. So I hope to see you on the next session. So remember, today, as I had announced earlier in the day, we have a Twitter space. We will be discussing the devaluation of fiat currencies, how that affects you as a person, how that affects businesses. Of course, try to understand how you might take care or strategies to maneuver around that. So you're most welcome. Make sure to join in and share your contributions. So for instance, this is a key decision point for the NASDAQ. So you're observing the price action at this area. And then once the market gets to this point, the next candlestick straight up downwards. And reverses the price action of two previous candlesticks, basically indicating a very strong entry by sellers. If the market was to close here, then this is a straightforward decision to now start looking for shorts. And this is for the Nasdaq 100 index. So that's it. See you guys on the next one.